What's going on, everybody? So let's take a look at NEO. I know a lot of you guys are interested in this stock. Some of you guys maybe are long-term investors. Some of you guys maybe have some open longs on this position. I know a lot of people love to day trade this stock, but let's really take a look at the technical analysis on NEO. So with that being said, we kind of have to look at the overall broader market, the overall bigger picture. A lot of the small caps really haven't been able to get it out of, their own way. A lot of things have been under tremendous selling pressure. The only stocks that right now, I would say the last week or two that actually look really good are a lot of the old boring value plays, the Dow stocks. Tech recently has been sold off. Your mega cap, your Tesla's down from all-time highs, and Nvidia looks like it's ready to lose significant levels. It's already down below the 50-day moving average. You got things like AMD coming in, the semiconductors. Facebook had a big downtick, so forth and so forth. But that, just getting into NEO and where it actually looks on the chart technically, there's a couple of different ways that you can play it, and it depends on where you're at with this particular trade. So for example, if you currently are in this play and you're holding somewhere, up in this channel, meaning that if you're holding over 32, over 33 and under 40, if you're in this range, you're experiencing a little bit of pain. It doesn't feel good. So if we just go back and we look at this candlestick here from the 2nd of December, this low wick here is kind of correlating with this little bit of downward sideways consolidation going back to September. As soon as we confirm this to the downside, this $34 area, we got that initial flush all the way down to 29. We did have a little bit of a dead cat bounce. Then we had this gap down. On NEO, there's still room to the downside to 26. Right now, it is below the 5, 10, and 20-day moving average. It's also below the 50-day moving average. The chart looks nasty. So unless you're a longer-term investor, meaning that you're averaging down, you're going to hold this position for 3 to 5 years, so be it. If you're someone who put on a trade recently within the last 1, 2, 3 months, if you're a day trader, you're going to get bounces, but the bounces are being faded. So what that means is a lot of people get really excited when you see a green day like this, $27 all the way up to 33. Now, you can day trade this, you can scalp this, but you got to be in and out. This doesn't mean, hey, let's go ahead and start a long-term swing position. A day like this, even following days after this doesn't mean, hey, let's go ahead and start loading the boat here. Because as soon as we came into this channel here where we were rejected at the 20-day moving average, at this linear regression line, we did roll over. We are in the middle of a range. We're on a downward trajectory here. To be honest, if NEO loses 27.50, it's a short opportunity into the 25.96. There's $1 room there. So for all you scalpers and day traders in here, what you're looking at is for NEO to confirm the bottom of the range here. You're going to take this short for about a point or two, kind of let it base out and see what it does. Now, if we really want to play this to the top side, we're really going to need to close over the 20-day moving average. That's going to be around $31.50. I think if we can close over that level on NEO, we're going to have an initial push to 33, but still this is going to act as a form of resistance here. You can see we're on a downward pattern here. Every time we get up into this area, we get rejected and sell off. We come up to this area, we get rejected and sell off. We come back down. So if we do get a nice bounce, what we're looking for is a bounce into that $31, $32 area here. And we're going to really need to start closing over this channel. And this channel is going to be, a price of $33.80. NEO just has so much work to do for the short-term perspective, meaning that unless you're scalping or unless you're day trading these big bounces, or unless you're fading the down red days, there's really no trade setting up here to kind of get into this play and hold. Now, if you're a longer term investor, maybe you're thinking about next year, this potentially is a good loading zone here in between 26 and 27. If we do start closing below 26, I would exit the position, kind of reevaluate that trade and see where we come down to after that. So if you're someone who's looking to hold this play 3, 6, 9 months down the road, this is where you're going to want to be loading, somewhere in this zone. You're going to want to be loading between the $26 and $28 level, $30 level. You're going to want to get in here, and then you're going to kind of just want to ride out all of the choppiness action going on. Like I said, we still need to get over the 50-day moving average, the 50 SMA, as well as the 50 EMA before this really starts to get, kind of a change in momentum. And even so, when we do take out 35.36, we're going to have more rejection at 36.50. We're going to have more rejection at 37.50. We're going to have more rejection at 39, more rejection at 40. So you can see what I'm saying. You're going to get a lot of chop, even if we do make it into this zone. And even if we do make it up into this $35 to $39 zone, we still have the potential to be rejected at this downward channel and come crashing all the way back down. So right now I would look at NEO as a day trade. I would look at NEO as a scalp. On days where we do get these bounces, I would look to long, okay, from a scalper's perspective, from a day trader's perspective. So tomorrow, if we get some sort of bounce in the market to start the week and we do, give 1, 2, 3 points, I would take your cash flow in this area here around 30, 31, 32. And I would cover your position and wait for the pullback to see, do we hold this level or do we continue to break down? If we do continue to break down off the false dead cat bounce, then we do have potential to come back down to 27.50 and we have potential to come back down to 26. If you're looking for a scalp position to the downside, you're looking for 27.50 to get violated. And as soon as 27.50 gets violated, you're looking for that point to point and a half move to the downside. And then you're going to want to cover your shorts right around that $26 area. I hope that helps, guys. I wish I had better information for NEO. It's just a chart looks really, really nasty. So, from a longer term perspective, can this go to 50? Can this go to 100? I'm sure it can. But like for right now, this week, next week, I wouldn't be buying any $40 calls. I wouldn't be buying any $35 calls for 1-2 weeks, down the road. I just don't see it. The room is to the downside right now. And we really need to get back over this channel of $33 before we can even think about trying to swing something to the long side. Right now is really not a swingers market. It's just not. Just trust me when I say that it's not a swingers market. Yes, we will get these green days where we come rising up. That does not mean that the selling is over. That does not mean that the change in trend is coming, because we're coming right into supply and we could immediately roll back over. It's just not a swingers market right now, guys. Just stay safe out there. If you want more information, you want more help, join my Discord. It's completely free to join. I also do have a paid section where I got some paid channels in there for a little bit more one-on-one coaching, live chats. I do daily signals and watch lists for the stocks that I'm trading and day trading. I do trade options. I trade every single day. There's always a setup out there that I'm looking at. So if you guys want to join that Discord, it's down in the description box below. Subscribe to my channel, give me a thumbs up, leave me a comment, let me know what you guys think about NEO, and I will catch you guys all on the next video.